This is a crazy, crazy market welcome. It is Thursday, 26th, a day of October 2017. My name is Derek and welcome. This is the 5 minute time frame for Bitcoin. Everything you do is within your own risk and your own reward. Situation of a symmetrical triangle within the 5 minute time frame. I already said that was the case. You can also look at it as the classic flag formation. Usually these correctionary neutrality phases correct themselves within the primary trend, and that would be obvious. Even a monkey could tell you that right now. Well, they can't, but you know what I mean. Short term, or just the recency bias, last 6 periods, a continuous up move up to this 18 average, and it gives you a little bit more reason that it might be ready to break, because the symmetrical triangle that I drew in is basically coming to a completion stage and should be ready to go. This has also been, for the most part, a dozen, whatever amount of candles this is, where it has traded primarily within this range. That's another reason too. I would think it's ready to make its next move, and I would suspect towards the upside. And I'm going to switch time frames. If you look at the time on top, it's 17:44 UTC. I'm going to keep it 5 minutes, but it's been 3 minutes since the action has changed, and this is what it looks like now. So it did break out above the 18 average of highs. It does mean extremely short term that this is support. 1, big time. 2, even decently. 3, you almost came close. 4, but yeah. And now another test of resistance. And I do, like I say, within this recent move, I like this uptrend. Another area where support might come in very short term again, but I think it's ready for a good break. And it's the daily time frame that I think you got to take seriously, as it is now breaking out from the 18 average of highs. And it did so after coming from this 18 average of lows. To me, this is a very bullish formation. It's already gotten past this ceiling of resistance after, of course, falling in the lower end and even below this support line. So a very, very bullish setup is in place for that of Bitcoin. And shifting on the weekly, I am going to be very cautious and cognizant of the fact that this leg higher on the break of this resistance is probably got a better than 50-50 chance, and I would say greater than 50% likely, or 50% likely, of encountering some resistance somewhere closer to the 7,000 ballpark area, give or take a few hundred. Maybe give a few more hundred compared to 67 to about 75, 76 range. Even up to 8, that would be interesting and incredible, but I think that the next leg higher would be like how this ending was, and how this ending, what's going to follow after will be some red candle, or a decent red candle, some move that would bring us back to the 18 average of lows, which has been so awesome within the year and even last year as being a good area of support. Now, as far as trend line analysis is concerned, the old resistance line is passé. Therefore, what's the current one? Somewhere around here. Not too far off from it. If you break resistance, you usually encounter one of two things. The favorite is, and a break is a significant break. I just don't want to see a small pierce, but at least a noticeable, like better than a thumbnail mover. like something like that kind of deal, a bit more over where it is. It's either going to have a very high volatile move and then retrace back, usually with big red candles back. That's the most likely event, because to break a very high uptrend line, you gotta have a big run, and then when a big run, you gotta follow through with an amazing one as well. That usually doesn't sustain itself. The second one is what happened here. It just keeps going and goes to another significant leg higher, and if it can do, and if it's maybe it can maybe do something like consolidate in a major uptrend, which is what it's done. It's really a fantastic thing to think about when you broke this resistance, so it didn't happen. It didn't say here or somewhere, have a big red candle into here, maybe run sideways around the 11, and then at some point later regain a bull market. No, that didn't occur. Instead, it created this trend channel. Now let's see if I can make one to work on support. That would work fairly well. Also, if I draw a trend line, say from the spring lows, now that's an interesting thing to see there, because it shows that after reaching this one, that this level of support and following through is nowhere near. The rate of ascent is most certainly at an extreme level. I guess this is the best one. Even now, this one is breaking away from this trend line, so the only thing we can do is, and even that one, if you can notice, over the last couple of weeks has been breaking through. So it works out, it's either, to me, going to finish off like I think it will, 65% likely maybe, and on the 35 just maybe have a run to close to 10,000 if it doesn't do that, which is pretty insane to say. But what would be the next leg higher, if we think about, okay, there's 1, 2, go like 3, 4, 5, 6, 7, somewhere in here. And where would the 8 be? Yeah, I'd have to be close to 10,000, maybe high 9s. So if we see the somewhat around the 7,000 give or take area not to be resistance, and I think you see prices in like 83, 84, it might even just keep on going another 1,000 plus as well on top of that. Would be a scary scenario, because the only way that could happen is if these insane major uptrend lines that have been holding for an entire year practically keeps going. It's so unlikely to break a resistance line of this kind of nature, but it could happen. It just means the rate of ascent has to go up a lot higher than it was before. Now, as I look at this even further, I'm looking at a logarithmic chart, and I'm curious to how many people used such in comparison to a linear chart, which is usually what is presented to them when they go to almost any charting platform. In my take, this trend line would have already been taken out. So let's take a look at it. And I haven't seen it, but it should be obvious that it has. And now that I've just taken a look at it, this is the exact reason why I was so big on these charts, because when the differences of the moves are so extreme, then you get a major difference between the two. So we're looking at the highs of about 1,300. Let's put the chart up. So that would be from here. I mean, it would be interesting on here. Well, this one kind of, if a move to 10,000 comes in, how this would look. But it would also be a psychological number too. However, I think there's a better chance that this is going to do what it always does, just looking at this linearly, big move up, fall, big move up, fall, big move up, fall. That's what's probably going to happen. However, if you're day trading, looking at variables where the high and the low is not that big of a difference, and in this case, we're looking at 5620 to 6,000 from the highest to lowest intervals. That's less than 400. That's less than 10%, significantly less than 10%. This is the linear chart. I'm going to put the log chart up, and it don't look much different. And there we have it. So another quick little update. I do like how this thing is holding on to these lows. If it can hold this area exactly where it's at like it is, and this thing is ready to break this resistance, you got to think that the 6,200 level would probably occur in anywhere between 15 to 45 minutes in time. But we'll see what market will do what it needs to do. Now let's put a somewhat random alternate daily chart up, and that will be that of LSK. And more periods than I would like to show, but I need to for this case within this analysis. When I started day trading, and I'm going to use another term, weak trading, although that sounds bad, like you're weak at it, like you're not good. But a day trader is someone who will buy something and get rid of it usually within the day. But what happens if you get rid of it within like 3, 4, 5, 6, 10 days? Whatever term is used for that. I think that's a better way of trading when you don't want to spend too much time with it. And even if you do, there's a lot of things as a trader myself that I'm doing on the miscellaneous front that would tie away from actual real day trading itself. But my feeling back in here when I started within pretty much the entire altcoin community is here we have a bunch of coins priced against Bitcoin, which is just soaring in price, as is the case. The price is up like 6 times higher since then. And how am I expecting these things to go up? Well, apparently it has. It's been in a it's higher than it was back then. It's got some volatile moves. But I realized that the only way for me to increase my Bitcoin total within the markets is I'm going to be forced into buying and selling other things. And that means I'm going to have to be ready to win in a bear market. And this is now bringing me a much perfect setup. I'm buying at 50,000. It's like so FREAKING obvious. I don't want to get hit with one of those inappropriate for you know what. Although it's getting better, it seems like everyone's getting hit with it. Anyway, the setup is so perfect. You break the resistance like this after it was hit through back in here. So the old pattern, lower low, higher high, now back to the middle part 18 average of lows. I love it. I just love it because if it breaks the support, it's going here. Now I already bought some. I bought some in here. Sure did. Not much. Very little actually. I'm planning on buying a lot more for 2 reasons. Because 1, it's cheaper, and 2, because I'm going to add a little more Bitcoin to the mix. But the strategy is when markets are down, you buy. And if you think of it from this perspective, if I had to have just say, what with that strategy, I'm like, okay, I'm just going to buy a bit here. So I buy back in here so I can put some sell orders in. Buy some back. Maybe sell some in here. Maybe I'm lucky enough to buy here. Maybe I can sell in here. definitely should be able to buy back if you're selling here. Loads of selling opportunities in here. And even if, say, my last sell order, I've sold out right in here, we'll say, I'm done. I got out at, say, 87 or 92,000 or something, and I'm sold out. And this will happen. And it keeps going up. You're like, man, I could have got more profit. Yeah, and you could have, but you know what? Who knows? But this sell order probably put a buy order back in here. Possibly you could have sold that. Buying opportunities in here obviously worked out. Selling opportunities in here obviously worked out. So now we're in the buying opportunity stage. That's why with these coins, I am going to keep buying them as they go down, while risk reward management for me is always job number one. I have to realize that if this thing breaks through here, yes, it's probably going to go to 50. But who's to say that's going to hold? Where are you going to buy next if you are going to fail? The answer for me is usually down in here. But the secret in playing the bear market for me is finding when a market has a key area of support. Hopefully it's within a great pattern, which it is, and then determining where a significant leg lower happens to be, because this is not it right here. I wouldn't even consider placing, at least within anything other than very, very short term, a type of order in the 60s, because that's not that big of a leg lower. Now in here, you might say, I probably might have bought in lower than that. So you never know overall how it's going to play. But if you just use the basic strategy of putting in your buy and sell orders and such, and starting from back in here after you probably bought from this profit, sell, sell, sell. And let's assume you buy here from this. This went, say, back in here somewhere. This maybe hit that. This one is still waiting, maybe at 60. And then you might even have a few others from before. And then if they just come, they come. And then market goes down. Oh, you hit at 60. Let's put a sell order here. Market goes down. Okay, maybe put a sell order up here, and so on and so forth. In February 2017, I wrote a computer program that would buy and sell a fund with dice rolls. Dice would be rolled twice, two random numbers, with one being random 1 or 2 to represent up or down, and another 1 to 6 to represent the amount of basis points the market would move. So I'd start off at 500. If I rolled a 3, it would either, if it was an up, it would go to 503. If it was down, it would go to 497. Playing with limit order rules, where if I start at a fund at 500, and I have a buy order in at 475 as an example. If the dice rolls from 477 to 472 on, say, a -5, then I still buy at 475, which is not an advantage for the player for me to wait and say, oh, it's down to 472, I'll buy it now. No, I'd have to buy it at that. And same for the sell. If I had a sell order, say, at 500, it was at 498, I roll a 6 to 504, I'd sell at 500. And I'd set it up automatically for a simple way of doing it, where say I'd start up at 500, I put a buy order for, say, for every 10, 15, 20 points or whatever. So maybe if every 15 at 485, at 470, at 455. And then after I'd buy it, I'd sell it at the same amount, like 30 points higher, or whichever. I was playing around with so many different numbers, and regardless of how I played it, as long as it was normal standard volatility betting, that it was a small advantage to the player. So it was interesting to see that, wow, actually I could outperform a market designed to actually go flat. Although you're better off playing blackjack with a consistent count of about +4 than you would be playing within this strategy. The profits were pretty minuscule over the amount of the just doing nothing. Like, just so, for example, if overall the markets went up like 0.15%, it was just doing nothing on the or random, I would do like 0.46%, whatever. When it all comes down to it, codes like this is okay cash on the daily time frame. When you can have movements like this, It's just so magnificent. You buy in here, all the wonderful selling opportunities and a satisfactory buying opportunity. Were you able to sell what you bought, buy it back, sell it again, buy it back, and the stuff that you were selling in here, maybe even in here, you bought on the way down. Selling everything, maybe even running out. And sell order here, 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 sell order here. Buy back, buy back, buy back, buy back, buy back. Heck, even this one might hit. And you get to the stage where, as you're moving higher, you seriously have a lot less of those tokens than you did before. So be it, because that's what these markets do. They go up and they go down. So the strategy of playing this way works great when you get any of the pump and dump kind of continuous movements. It's magnificent, as well as anything that is just choppy. Because if you knew a market, I'm going to draw the same sort of thing again. If you knew a market was going to do something like, say, this over and over, I mean, there's just a lot of sick profits in there. It's the type of markets you're looking for. However, when markets go straight down and never really go back up much, and every rally is just that at best, it just keeps going down. Any type of corrections are usually just sideways. It's going to lose, because you're hardly ever, if ever, going to get many sell opportunities. You're just going to keep buying and buying, and the value of your portfolio just keeps shrinking and shrinking and shrinking. That really is the only real big losing risk, because the next one is actually a winning risk. And that's if it does the polar opposite. If it just keeps going up, it really doesn't go down, doesn't have any decent sized price swings to the downside, you're going to sell out, albeit for a profit, and not be able to buy back. So again, it's a situation where, let's assume you were to put sell order, sell order, sell order, sell order, sell order, sell order, and you're done, you sold out here. Let's just assume you bought 1 Bitcoin worth of whatever token this was when it was lower. And when you sold out here, you were worth, the whole thing netted you 3 Bitcoins. So you profited 2. Yet your buddy who didn't do any selling besides you, he also put a Bitcoin in, and yet his is worth 10 right now, or 9, or whichever much larger number. So you lose out on gains, but you still profit on the play. Those are really the 2 big risks from buying anything when it's noticeably down. When you buy it, you want to sell it up here. And when you sell it, you want to buy it back down. And generally in a bear market, when you sell, you want to buy it back lower than where you last bought it. And in a bull market, say you bought it here, sold it here, then maybe you might want to buy it back somewhere around here. And then a neutral market, then it's wherever you bought it last time. So thank you for tuning in. I'm now going to complete this video. So obviously, I'm working towards buying within the months of October into November. I'm going to wait for significant leg lowers to be buying from this point on. And I do think that there will be a significant leg lower in Bitcoin, but there's been many of them. When I say significant, just to move down the 18 average of lows, that's just going to freak so many people out, because that's what normally happens. Thank you for tuning in. Take care. Bye-bye.